All right. So Tuesday night, I finally got my nights correct, not Thursday night, but Tuesday night, the 5th of April, we are looking at a Traders Club Live session where I'll be going through some trade ideas. I think we have a news for the ISM services PMI for the US to be released at 10 o'clock. So I'll hope to identify possibly some trade ideas there as well. But what we'll be doing is looking at H1 trades, trade ideas or trade opportunities, possibly even into the M15, and then, what else? Do a quick review of the Aussie RBA rate decision and rate statement as well, and go through a bit of a review of that. And if you have any questions, please feel free to ask away, unmute yourself or type in the chat, ask away, and then I'll address your questions. Whether it's a trade or analysis or economic review, that kind of stuff, right? So if you are watching this on YouTube, then it's 1 week late. We're releasing this 1 week later on YouTube for everyone else, but Traders Club members get this live. So with that said, quick disclaimer again, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker, so please remember to do your own analysis before entering any trades. Right, so before I get started, any questions? Anything so far at this point? Not, I will look into, oh wait, which one am I sharing now? Are you looking at this when I'm clicking the button? Okay, cool. I've got two screens. I'm just confused a bit. All right, so just this afternoon we had the RBA rate statement, the cash rate. There was no increase, so it held at 0.1%. I think there was some questions being asked in the Traders Club about why did Aussie go up that much despite interest rates being held at 0.1%. So some of the, let's just do this. All right, so some of the, you can see here, this just came out 10 minutes ago, that the RBA drops the patience to send the Aussie higher. So just doing that quick review again, when you click into the rate statement and you click new latest release, it goes to this. Right, so this was the latest one, and this was last month. So last month, as they ended the statement, this was on the 1st of March, they ended the statement with the board is prepared to be patient as it monitors how the various factors affecting inflation in Australia evolve. And then this month, they have actually just gone and said the board will assess this and other incoming information as it sets its policy to support full employment in Australia and inflation outcomes consistent with the target. So, people were picking out on the word that they left out, saying the board will be patient, indicating likelihood of rate increases possibly being a little bit earlier. Previously, it was anticipated that rates will be in some rate increase will be likely in August. Now they're looking at May. So the next meeting in May, they're looking at a possible rate increase. I think the word, as much as the word patience was dropped, possibly not that, or there's one factor to cause the Aussie to go up. But, I was sharing all these highlighted points in the Traders Club as well as it was being released. The main things that caught my eye was that, the RBA's forecast for unemployment rate to fall below 4% this year and to remain below 4% next year. So very good employment numbers together with the inflation. It has increased in Australia, but lower than other countries. Inflation is at 2.6% and in headline terms is 3.5. So it's still within, slightly higher, but still close to that central bank's target of 2 to 3%. So at 3.5%, they just need a bit of a, just creep slightly higher, but not that historic high compared to in the US and in the UK. So these two main things indicated that positivity, that likelihood, right, shows how the employment number shows how strong the Aussie economy is doing. The inflation number being 2.6 to 3.5% shows that the RBA is hitting its target. It just needs to slow it down slightly. So it gives all that positivity. That's why we saw that Aussie dollar go up. And then also the board here wants to see actual evidence that inflation is sustainably within that 2 to 3% target range before it increases interest rates. So you can see that in the US and in the UK, I don't remember what the inflation numbers are exactly, but it's gone way above. I think some of it, I think the US is at 8%, right? Correct me if I'm wrong, but it's about 7 to 8% there. So it's gone way above, and only then are they starting to take action a bit more aggressively, especially in the UK. So in the RBA sense, they want to, because it's at 2.6 to 3.5%, they don't want to tap on the brakes too soon, right? Tap on the brakes as in to increase interest rates. They don't want to tap on the brakes too soon, because then inflation might again drop back to below 2%. So at this point, they're looking to see maybe for inflation to go a little bit higher from the 3, maybe even the 4% before they start tapping on the brakes, or they might start tapping on it right now. That's why the indication that we might see rate increases from May, one rate increase in May, right? So because of that, we saw the Aussie dollar climb. Let me show you that. Aussie dollar. So the Aussie dollar we were looking at shot up. This was at the news. I'll show it to you on the H1 time frame. So this was at 12 o'clock, where the dollar actually shot up right from that 7540 all the way to, within that 1 hour, 76, right? So that 75 for about that whole almost 60 pips move in that 1 hour, and then it continued on for the next couple of hours, a bit less, and then now it's sitting in consolidation. So that led to that big move towards that 760 or 76 resistance level, now sitting at 7631, right? So because of the RBA indicating stronger Aussie economy, indicating, possibly that they're not going to be as patient, they might do a rate increase in May. The rumor is that they might do a rate increase in May. That led to the Aussie dollar shooting towards the upside. So in this case, if you didn't do that straddle, then there's no selling there. It broke above our buying at 7550 or 7549. I hope you jumped into that trade. Would have made a good 60 pips, 50 pip towards the upside. At this point, what to expect for the Aussie dollar, I'll show you shortly. All right. Any questions so far at this point? No questions?
I just, I threw a question in the chat. That's strengthening over a number of hours. Is that typical for positive news?
Yeah. Okay. So especially for the Aussie news in particular, what usually happens is you think about the markets opening, the global markets opening. Australian news gets released, while the Aussie dollar and whoever else is trading at that time would obviously react the most to that news. I'll bring the Aussie dollar back. Right. So the biggest reaction is once the news gets released. And then after that, you can see that at 2 o'clock, between 2 to 4 o'clock, there's the other big jump, because that's when the Europe and the UK market opens. So we see another move towards the upside, and then we might see another move towards the upside with the US market opening. But because it's already gone through 1-2 markets, the next move towards the upside will not be as significant compared to if it was a US news, pushing towards the upside or that first move. So usually when it's a big news being the interest rates decision, back previously was QE printing or tapering, all those big central bank news are likely to see big moves and then a bit of a continuation, 1 or 2 sessions into continuation, and then after that it will taper off. Does that answer your question there?
Yep, perfect. Thank you.
All right.
Sorry, Jin, I've got a question as well. So
Yeah, man.
why did this move happen compared to the previous month where, it was it saying relatively the same thing the previous month? Because previous month it didn't move. Like it was, cash rate was the same, but do you know what I'm saying?
Yeah, you just missed the first 5 minutes of the session.
Oh,
Okay. Now, so what happened was that you're still looking at. I'm still sharing the statement screen, right? Okay.
yes.
So what happened was that this was on 1st of March. Last statement, everything they say, no increase, da 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 da. Main thing was the board was prepared to be patient as it monitors how the factors affect inflation. But this statement, one of the factors was that they removed the word patient. They said the board will assess this and other incoming statements or incoming information. So again, just to recap, the previous expectation, the previous market consensus was that the RBA was going to increase rates possibly in August or later into the year. But with this new statement being that unemployment rates below 4%, inflation at 2.6 to 3.5%, and then they actually want to see sustainably over 2 to 3%, and dropping the word patient, that all led to fuel the rumor that, or the anticipation that we might see the RBA increase rates possibly in the May meeting, which is next month. So if anyone's going to buy a house in Australia, make sure you get in locking your rates soon before rates go up. Might go up. All right. Does that answer your question there, Paul? Cool. Yeah, so what, lost my train of thought. What were we doing? Okay, so back to the DXY. So dollar, we were looking at, so just this morning I was sharing saying that we were looking at it on the H4 time frame. I was saying that it's going to sit there, possibly will drop a little bit, consolidate before moving higher. It's done that exactly right now. It's gone up, it's set right across. For today, I was just telling the guys before the session, bit of a boring day. It's just sat there. It's only started to move this last hour and now it's just been sitting in consolidation. I think that for the dollar index, we're likely to see it push. Once it can push above 98.97 or 98.98, then we're going to see that push towards upside towards that 99 number, possibly towards 99.30 and maybe even 99.50. I think it will slowly move up. I don't think there'll be a big jump towards the upside because there's no real driver, no big news being released at this point to try and to push the dollar towards the upside. All right. So that gives us a bit of a bias, a bit of a directional bias towards where we think prices can be heading. And also to bear in mind that this has been sitting in consolidation. If it pushes up, right, pushes up towards upside, then again, that revision back to our Aussie dollar, right, that's set right across for the last couple of hours. We might see it push a little bit up, but then I think that we'll see it. I don't think we'll see it track down towards that 76 level. I think that we'll probably see Aussie trying to climb up, but the dollar getting stronger. I think we're going to see it sit at this area for below 76.60, sit in this area for for the time being, right? So just to give you a bit of a view of where the next resistance could be. All right, we have 77 there. We have 77 there. I like 77 as a resistance. So I think I'll leave it there. I was thinking whether to move it slightly lower, but I think that as a resistance level, that's reasonable just because we've seen it bounce a couple of times at these points over here. So I'll keep it at 77 flat. Right now we are at 76.40. I would be a bit careful trying to trade it towards 77. All right, so back to the Aussie on the H1 time frame. What would I expect to see here? I think that we'll see it track up towards 76, maybe towards 76.50 and sit across. Okay, I don't think that if you haven't entered a trade in the Aussie, I think it's a little bit too late. I think that we've seen a very big move already. We've seen for today, the Aussie has already moved up that 96 pips, almost 100 pips towards the upside. I think that we're going to struggle to see it move significantly higher. It will move higher, but significantly higher might struggle a little bit. So might not be the best trade pair to trade at this point. That looking at the Kiwi dollar as well. We had that one trade, that second trade this morning. I was telling you guys that we were looking for reload. That reload together, the correlation between the Kiwi and the Aussie, same move towards the upside. That reload towards the upside was a good, again, 50 something pip move. Hope you jumped onto that. If you didn't, then same thing. Look at that. It's gone up to this 7.7 level, almost that flat number. I think it's going to sit in that consolidation. It could get to that 70-50 level, but again, that 50 pip level might struggle to get there, right? So the last time we saw the Kiwi hit that level was a very long time ago. Okay, was back in last year, right? So it came down, bounced back up. So for it to move towards the upside was in October last year. I think that while it might be possible, we're possibly going to see it sit across a little bit, move up, but I would actually be more tempted for the Kiwi dollar and Aussie dollar to see where is it going to end up before trying to sell it back down, right? I think that it can move towards the upside. This might be two pairs that you want to look at for possible counter trend trade ideas rather than trying to buy it further up, because there is upside. You just don't know how far it will go before it starts turning back down. Just very recently, it turned down from this 69 or 69.90 level. I think now that's extended. Quite likely we will see a little bit of a move towards upside before a big turn back down again, especially if the dollar index continues to move towards the upside. Makes sense so far? Something to chat with. Strengthening over a number of, okay, I just answered that one.
Just so Jin, that strengthening in the New Zealand dollar, that's a direct response to the RBA announcement today.
Yep. That's a correlated move. New Zealand and Kiwi dollar and Aussie dollar move together. Not all, they don't move together all the time, but because it's that big a move, so we saw that correlation come in. One thing to pay attention to tonight, we do have the New Zealand GDT price index. So GDT is global dairy trade. Sometimes if the percentage is a big change, then we might see some move in a Kiwi dollar, but most of the time not a big impact there. So Kiwi moving up as we speak now, but I think that if you were forced to enter a trade, if you're forced to enter a trade, then I would say, an idea might be, if you look to buy above this 7.7 level, take profit about 30 pips, stop loss below this point, about 20 pips. There's a 1 to 1.5 risk reward ratio possible, but keep that in the back of your mind. You might be looking for other trade ideas instead, maybe something else more exciting. So this is how I look at my charts, or how I look at my trade ideas. I go through the different charts. I look at possible trades, example like the Kiwi dollar buying up, but I feel that's a bit toppish. Then I'll look at the euro dollar, for example, now, and see whether can I sell it down, right? So euro dollar, we were just talking about this morning. I was saying that reaction at 1.0944, 1.0945 would be interesting. Right now, euro dollar dropping slightly. I want to see it come towards this point. Then the reaction to this level is going to be possibly going to be a lot more exciting than trying to manage that trade on Kiwi dollar, right? So if I were to rank, I would rank the euro dollar a little bit higher right now than the Kiwi dollar, just because once it comes to this support level, we might see a breakdown. If we see the dollar strength, a breakdown, and then that will move a lot faster than the Kiwi dollar, because Kiwi dollar is trending up, right? So Kiwi dollar is trending up. Even if we do see a stronger US dollar trying to pull it down, and you'd be like, oh wait, it's been moving that much over the last couple of hours, should I be selling it back down? But the euro dollar would make it a lot easier because it's been dropping. Stronger US dollar, push it lower, sell it. Follows the trend, follows all the fundamentals put all together. I think in breaking that support level, we see that as a stronger move towards the downside. All right, so the euro dollar analysis would still hold. I don't think it will bounce back up. So I'm looking to see it break that 109.45 level to sell below 109.30. And then we have that trade. So I would still hold the analysis for the euro dollar as of this morning. Then pound dollar has not done that much, right? So right after the pound dollar, I'll look into the analysis, the signals that we sent out. So pound dollar has not done that much. It's gone up over an hour, gone down, shot up, shot down. It's sitting in a very tight range, which is not good for now, but it's going to be quite interesting, right? So for this couple of hours or the whole day today is in that 27-30 pip range. Usually pound dollars, after sitting in a range, you can see that it tends to pop towards the upside or the downside. So we're actually looking to see what could happen here on the pound dollar. So you see that euro dollar has been dropping. Pound dollar has actually been trying to go up, came back down, trying to go up, came back down, tried to go up. Last 30 minutes has been trying to go up, now trying to come down a little bit. I feel that it looks like the pound dollar is finding support at this 1.31 level. It's struggling to break lower, looks like it's pushing higher. So I was actually anticipating pound dollar to push higher, right? So no trade on the pound dollar yet, but it's going to be a little bit interesting to see what's going to happen there. So remember, euro dollar dropping, pound dollar, I was anticipating it to push up. So leading towards the euro pound, right? Leading towards the euro pound, that's why I signaled out a selling. Euro pound was sell at 8351, which is right there, 8351 at this line here. Right, so I signaled it a bit earlier just so that if you're able to catch it. Euro dollar dropping, following the trend. Pound dollar looking like it was going to push towards the upside. I was anticipating for the euro pound to break this level and track towards the downside. That's why we sent out that signal on the euro pound. Did anyone jump onto the euro pound signal, by the way? It's a couple of pips into the money right now, but not that much. About 3 pips into the money right now. All right, so just to give you a bit of an insight into how I think about the trades, how I set up, how I look for setups, and then why I fire out those signals. This is the euro pound. We sent it out 3 hours ago, so 1, 2, 3, as it was dropping towards that point. We sent out that sell signal there. Okay. Then US yen. US yen, still looking for it to move up, still looking for it to break that 123 level before looking to buy. I think this will be quite a good trade opportunity for the US yen because we're looking at the dollar pushing higher, getting stronger. So US yen pushing above 123 could be quite interesting. I would say that in this case, this was the H4 trade. I think in this case, you could even be looking at a bit lower. So about above this point here. So at about 123.20. 123.20, you could be looking to buy the US yen towards the upside. It's only about a 20-something pip wait before we look to buy it up, before we trigger a buy entry. Okay. Then euro yen. Euro yen is going to be a little bit trickier. The euro dollar dropping, so it's going to drag the euro yen down. US yen possibly pushing higher. I hope it pushes higher, but it does have that resistance level there. So if we do, I'm sorry, I'm switching charts around so much, but I'm just trying to see everything. If it rejects this level, it rejects this 123 level, then we won't have a buying opportunity on the US yen. We could see it turn back down, similar to what happened here. All right, similar to what happened here. If that happens, then euro yen will be very good to sell, right? Because we see it rejecting this 134.98 or 135 level. We see that rejecting. We see the euro dollar pulling it lower, the US yen dragging it lower. We could see this as a selling opportunity towards the downside if the US yen turns from its resistance level. So you could be looking for selling at about that level, 30 pip stop loss. In this case, you want to be a bit safer. You might say 30 pip take profit level towards today's low point. Once it gets there, close out the trade. If it's going to break lower, then you could get into another trade. But I think that with the support level at 133.80 here might be a little bit too close. So you could even be looking at a 30 pip stop, almost 90 pip take profit, but decide at 134.37 at about that point, whether you're going to close out the trade or hold it as it breaks lower. So I would say euro dollar, good, quite a high trade opportunity there. Euro pound, quite likely. US yen and euro yen, I would say it depends on which way the US yen moves. If it moves towards the upside, then I wouldn't look at euro yen. If it rejects that resistance, then you have possibly the euro yen a lot more attractive than the US yen. Okay, then pound yen. Pound yen, I'll be very careful, right? Just because the way we've been talking about the pound dollar just then, spiking up, turning back down, turning up, turning back down. The high risk trade will be to anticipate that it is found support at 160 and it's going to push up. But with pound yen, we see a lot of volatility. It is at this point here, which if you look right across to the left, it is at the same level where it's reversed very significantly and then went all the way back up again. So imagine if you were at this point thinking that it's going to move up, you had a stop loss at this level, and then you would take profit there, it would have hit your stop and went straight up. So I would be very careful with pound yen. I think with the way the pound dollar has been moving, possibly stay away from pound yen for now, right? Let it find a real direction, let it really break towards the upside, then look to buy it up. But I think at this point, no clear direction on the pound yen, despite that move from 160.80 to 161.44. Pound yen moves very fast, but a lot of volatility there. All right. US CAD. So we did a signal on the US CAD early today. Right now, US CAD still dropping quite significantly. US CAD 1.2479, we signaled to sell 1.2479, which was at about that point, right? So it's that candle 1, 2, 3, 4, 5, 6, 7. Yeah, so about that point there at the start of the candle, look to sell as it broke towards the downside. So we had that trending down. As it was breaking lower, I'll signal a sell just because it's broken out of this consolidation here. So it moves across. Once it starts breaking lower, 1.2479, once it broke out of that point, I said, okay, it's broken off consolidation, look to sell it down. Take profit level 3 was 1.2419, 1.2419 is way down here. I don't think it will get to TP3. At TP2, 1.2439, 0.2439 is just hit. So if you had this trade, you would have hit TP2. I actually closed out my trade at halfway between 1 and 2, so at about 30 pips. It closed out because of that point here. So my trade closed out at 1.2441, 2441, which is about just there. So just about that point there, just slightly. So once it hit close to that level, it closed out, and then now it's continuing to drop. Could hold on to a take profit 3, but I think that it will get there, but it's going to be a bit too risky to hold on to such a trade for the long term, because you can see that nothing much further down for the US CAD, right? Even if I had to go to the H4 time frame before we saw that in October, November last year. Once it breaks below this point, okay, I'll show you here. This is October, November last year. We saw a lot of tails, a lot of volatility at this level. Only once it broke below that 1.2420, then we can see that stronger move down towards the 1.23. So, for me, what I would do is I'll stay out of the CAD all the way until it goes below, until it goes below 1.2420, then, I'll be looking to sell it down towards that 1.23 level, multiple trades over and over again. Then after that, decide what happens at 1.23, whether it's going to bounce off or turn back up again. So just be very careful with the US CAD at this point, especially with our analysis on the index that we're anticipating for it to push towards upside. So if we gain strength on the dollar, then the US CAD is likely, or should be likely, to push towards the upside. that said, I was sharing something on the platform, on the club platform. There was news, there were rumors that, where is it? Early today, I was just sharing a link with you guys. Where's the link now? I don't know whether you guys saw it. Okay, there. So big Canadian banks unanimously expect a 50-point rate hike next week, right? So that could be that big driver to push the US CAD down towards a 1.23 level. Not right now. I don't think there will be that big a driver to push it towards 1.23. But if we do see the Bank of Canada, the BOC, do a 50-point rate hike next week, then we could see the CAD push very briefly, I think very briefly, towards the 1.23 level, hit that point, and then maybe bounce back up again because of that dollar strength. So when is it likely to happen? Next week on Wednesday night, 10 p.m. rates looking to go now currently at 0.5%, might get to 1% on the rates at 10 p.m. on Wednesday night next week. So bear in mind, if you have any CAD trades, make sure, especially if it's counter trend, make sure you close it out before this news. But if you are in the money, if you're selling in the money, maybe you want to hold on to it, put a big take profit on it, and then you could see a big spike towards the downside, right? So very quickly, that was the Aussie dollar. I think it might have exhausted its move towards the upside. Possibly will still move up a little bit, but not significantly. Actually, it's turned down as slightly expected right now, or no, sitting in consolidation at this point right now. So not too keen on the Aussie. Kiwi dollar we were looking at as well, right? So still, if you had to, but I think I would rank this very low below the list on the possible trade idea. Euro dollar, right? It's bounced up a little bit, but I think that, I would be very keen to see this drop towards that 109.45 level and then see further downside on the euro dollar. So if you're not able to trade this, I think that it might happen tonight. It might gravitate down or sit at this level and slowly move down. Might be something to look at, a possible order, sell order at 1.0930. Below 1.0930 might be a possible sell order, as it might happen quite late into the night. Euro dollar is quite high on my list. Euro pound as well. Right, so I think that now it's bounced back up, but we could see it push lower. US yen is, remember what I haven't done yet, gold. US yen has resisted that level, right? Resisted at 123 level, which means that Euro yen is going to be quite interesting as it turns. Where's my Euro yen? Euro yen is going to be quite interesting as it turns towards the downside. I think this is now going to be quite high on the trade idea rankings, because if it in the next 13 minutes, if it closes like that, we could see it track quite significantly lower. All right, with that, looking at gold. Well, gold tracking up. I think it's still sitting in that consolidation. Where's my analysis on gold? All right, so gold sitting up, I think is going to sit in that level. I don't think it will go past. I mean, do you all trade gold that much? I think you'll get to about 19, not more than, might track towards 1940. So 1940 might be a good target, or even 1945. But I think that, as you can see, 1940 is about that point there, so it's resisted. 1945, about that point there, resisted. I think the upside is possible, but a little bit limited for gold. So gold is either you go super long term, buy on the dips, or you go super short term and then you try and scalp it in the trending direction. All right. Any questions? Any other questions at this point? Nope. Okay. So looking at the news, back to the news again. Today, well, yesterday we didn't have any news, well, no big news, so I'm not going to review that. Today, we do have the US ISM services PMI numbers. As I was saying, going from 56.5 to 58.6, we might see that push, that stronger PMI number, which means that we could see that dollar strength come back into play at 10 o'clock. Could fit aligned with our analysis on the dollar index consolidating before pushing up a little bit. So 10 o'clock might be the trigger to push the dollar up. On Wednesday, I would anticipate that we're going to see more of a trending scenario, not much news. And then on Thursday, FOMC meeting minutes. Remember, it's the minutes. The meeting has already happened. We already saw that 25 basis point increase. This is the minutes. Not likely to see big price movements. Don't stay up to 2 a.m. or 3 a.m. or wherever you are, 5 a.m. Not likely to move prices too much, but it will be interesting to see how close were they between a 50 and a 25 basis point decision, right? So at this level, it's just for hindsight purposes. I think what's more interesting into next month FOMC meeting, where it's been rumored, they've been talking it up, that they're likely to increase rates by 50 basis points. And then nothing much else for Thursday, and into Friday, the CAD numbers, but we'll do our Thursday session and I'll update you and give you more trade ideas from that point on. Any other questions? Anything else? Any trades you want to look at or do a quick review?
Yeah, Jin, the questions that I put on the forum from earlier on today.
Yep. Yeah, that's right. Wait, I'm just scrolling. I forgot which.
Yeah, it was on. I'm just getting there myself. Actually, it was on Euro GDP discussions.
Okay.
So I think we were talking about early anticipation on one of these trades. Let me backtrack here. Yeah, so for example, the Euro USD signal from a couple of days ago. So you maybe just walk us through your entry on that trade. I think we both bailed out at the same time, but I got in somewhat later after you once it breached that support resistance, whilst I think you had anticipated more. And I was curious what, maybe if you can walk us through your thinking for that early anticipation on that trade.
Sure thing. Let me just bring that up. Oops, wait, I lost my screen. Okay. All right, so euro dollar. Euro dollar, we were looking at a signal. The signal was selling at 1.1042. And this was yesterday. So the 4th, I'll just put in the vertical line. Oh, well, horizontal line at 1.1042. About that point there. And then this was at about 2 o'clock, just before 3. So at about 2 o'clock. about that point there. So, okay. So the signal was to look to sell at 1.10442. Okay. So we sent out a signal there to sell. Same thing, very similar to the CAD analysis that we just did. Why that sell signal? Just first, the entry is why that sell signal was because we saw it sitting in that consolidation, right? For the last, well, since the start of, last night, right? The 1st of April, on Friday, we saw it sit across, hasn't done that much. And then on the 4th, it broke lower. It's a bit of an early signal just because, I want to give you guys the heads up first, anticipation there. So an early signal for it to look to sell down as it broke out of that consolidation. So makes sense on the entry so far?
Yeah, just in your YouTube training, you do talk about support resistance as zones and then entering once it's breached the zone. So in this case, it seemed to me to be not quite, but a little bit early. And I'm just wondering how much risk there is with potentially that bouncing off support and resistance if it hasn't fully broken that consolidation or that support resistance zone.
Okay, so I wouldn't say that this would be a support or support zone or resistance zone. This is just a line there to show you that consolidation. This yellowish golden line is actually more the resistance level. That's the support level. So how I'd have looked at it is that if I zoomed it out, it's come down, it's hit that support, it's broken that support. So it's just broken that support and it's sitting at that point. So that's more the support zone. All right. So it's broken support and then it's breaking out of that consolidation. That's why we look to sell down towards that next support level, but the next support level is quite far away. Let me just check. That's about 90 pips, so it's quite far away. Based on our signals, I typically try to keep it shorter term. Let me just move that. Okay, so that was the entry there as it broke out of the area. So the next one was the stop loss was 1.1072, which is just about that point there. So typically I would put it above the resistance level, now support and resistance level, but I'm trying to keep a bit of a consistent approach on the signal. So I have it at about 30 pips. So at 1.1072 at that level there. So at the resistance level. So that explains the stop loss. Take profit is 1.1022, 1.1022. About that point there. All right, so 20 pips as a take profit. No real reason why at take profit level 1. Usually we have at 20 pips, but 1.1022, you can also see that it's come to that point and hesitated at that level. So a lot of times you can see that the signals are all centered with 30 pip stop loss, 40 pip, 20, 40, 60 pip take profit level. Just why 20, 40, 60 is because we've always seen that, at the entry, the 20, 40, and 60 is where we do see some level of confluence or some level of hesitation at that point. You can see here 1.1022 in the horizontal line again. 1022 about there. You can see that if you sold it down, it will sit here and bounce back up. Sold it down. If it broke below, then we can see further downside. It's set around here. It hesitated at this point. So that's why that 20 pip on the first one. Second one at 1.10, almost 1.10 flat. 7 about there. Again, that point, all that consolidation at those levels. And then finally at 1.0982, at that point, 60 pips, you can see that it's hit those points and then hesitated again. So what happened here on the euro dollar was that this was the entry, take profit 1, take profit 2, and take profit 3. What I actually did was I got out of the trade at 1.1006, right? So 1.1006 is about just before this take profit level 2 level, just had my take profit level there, hit, and then it closed out.
Yeah, what was the trigger for closing out at TP2?
Actually, I wasn't watching the trade, so I didn't think that it would get to TP 3, so I put it at TP2, and then it just went down, hit my TP, and closed out. I didn't get a choice to hold on to the trade.
Would you have held on to it, seeing what you see, or do you think some of that, some of those green candles and a bit of consolidation at TP2 was enough to bail you out?
Okay, so what happened was this entry TP1, TP2. Okay, so looking at that, I would have. Okay, so I'm just trying to make it look like it's live happening right now. If based on this candle there, I would have held on to the trade. And then the next one coming out, I would have think that it would hit TP 3, and then that one, as it looks to bounce back up, I'll probably be looking to close out there, because I would start thinking that it might bounce back up.
Yeah. Do you ever go down to a lower time frame either to confirm entry or to confirm exits, or do you strictly if you're entering on a H1, you will always exit on a H1. You won't go to a lower time frame to time exit?
I would say stay on the time frame that you have entered the trade, just because if you entered on H1, then you went on to the M15 or the M5 or the M1 or any other time frames to give yourself a bit of confirmation. You could be looking for a reason rather than actually seeing the reason. It looks like, oh, I see something there on the M15, or if you don't see something on M15, then you go to the M5 and you go, now I see something, another reason to close out. So yeah, I would stay on the same reason why you entered the trade on the H1.
Yes.
Stay on H1 onto why you want to get out of the trade.
Getcha. And one last question, if you can go back to the charts for a moment. You mentioned at your entry, at your point of entry, that wasn't support and resistance. But if you go on the 4-hour chart, and I notice you always suggest putting your levels in on the 4-hour chart, that doesn't appear to you to be a level on the 4-hour going back.
No, I would actually, I like this as a level just because it's reacting to this point here, it's bounced off here, it's reacted here. And if I have a level here, having another level here would be too near. So, and I like this point just because it's reacted over across all of these points. So the thing is, you don't want to have your support and resistance levels too close together, because what will happen is you end up not having any trades.
Yeah, that's what caused me to delay entry when you entered. Is if you go back at day 28 and 23, you'll see some of those resistance levels, and that's what held me back from entering the trade when you did. But yes, on the 28th of March and on the 23rd of March. So yeah, that resistance there, and the one before it.
I think I need to zoom in a bit. Yep. This one's.
No, go to the 26th of March. Yeah, that resistance level there, and then on the 23rd of March, same resistance area. So I plotted a support resistance at that point, and I only entered once price broke that level.
Yep. You can, I would say, you can choose to do your support resistance on the H1. Just try not to have it too close together. Try to have it a bit more spaced out, because if it's too close, you just wouldn't have any trades. It would just be going from levels to levels, and then you just wouldn't know when to enter the trade.
Yeah, gotcha. Excellent. Thank you, Jin.
No worries. Anything? Paul has his camera suddenly turned on, so I'm sure he's got a question. All right. If not, then I think looking at the way the prices are moving, it looks like it's going to be a bit of a quiet night. It's either going to be a quiet night or it's going to be a long night, because once when I'm ready to turn off the computer, it's going to start moving again. So it might just not move, or it's just going to be all the way like that. With that, if it's quiet, don't force a trade. Don't try and jump into anything. You can't move the market. Just remember that. You just have to see what the market is doing before you jump in and make some pips. You can't jump in and make the market move. All right. So we'll catch you tomorrow for the pound dollar. Let's hope that pound breaks out of its consolidation mindset and we see some good directions from the UK. All righty. Trade safe, trade well. Good night. Bye-bye.